Hi guys, welcome to another tutorial, and in this one I will be telling you how you can find a growth stock. But before that, I just want to say something that for the previous few tutorials I have been working on my accent, and it has improved a bit, but I haven't got any feedback that any of you is able to get that what I'm trying to explain, or whether you're liking the new accent or you don't like it, or maybe you even hate it. So just anything that you think is good enough, or anything that you think is required to improve in my accent or not, that please do take a time out, take a minute or two out of your precious time. I do value your each and every minute, but please take a minute or two out and comment in the discussion forum that whether I keep on going with the new accent or not, because I really want something to comment, and so that I can improve on that, because it will not only help me but also new students, that they will be able to understand each and everything in my course. So I'm going to improve the course, and I am improving the course. For every other video I have provided the subtitles. I will also be providing some resource files for every video, so I am improving the video and the course. So it would be a lot of help if you just take a minute out and tell me that whether you like the previous Indian accent or the new accent or something like that. So it would be a lot of help to me. And now let me just talk about how you can find a growth stock. So in previous tutorial that I told you that what is a growth stock. Now as you know that there is huge potential in these stocks, and they are the ones that rise rapidly, then they have the potential to make you a lot of money. So now the question is, how do you find a growth stock? Well, I'll tell you how to find it, but there's no guarantee that after finding that you're gonna make a ton of money, because there's no set criteria or formula from which you can find a growth stock. Also, even if you find one, then it's a continuous process, as you can analyze once, but news affects the prices of stocks, and so you should be able to know which news can significantly affect the company. So now let me just tell you how you can possibly find these types of stocks. And the first thing you gotta look for is earnings. So in my previous tutorials I told you that demand and supply changes the stock prices, and technical analysis determines stock prices. But one thing that I didn't tell you was that what exactly increases the demand, and why is there increase in demand or supply. I told you that news changes the demand and supply, but that's for the short term, like a day or two, or maybe sometimes a few weeks and months. But in the long run, what increases the demand and supply? Well, the main thing, or you can say the most important thing that drives the stock prices in the long run, are earnings or profits of a company. So it is obvious that nobody wants to invest in a company which is making losses. There's no reason for investing in a loss-making company. But everybody wants to invest in a profitable company, because that's a financially sound company and it is expected to pay, or it may be paying, dividends. So if its profit increases over time, the dividend will also increase. And that's why everyone likes profits. Now what you should look for is a stock that is growing at an above average growth, or growing more than the rate the industry is growing at. So you can check which stock you want to buy, and check which industry does it belong to, and then find what's the industry growth. Also, any stock that's growing at more than 30% is typically a growth stock, only based on earnings, irrespective of which industry it belongs to. If a company is growing at 30% or more consistently over the past few years, then it is usually considered in a growth stock category. And always focus on the consistency, because a company can grow at 30% for a single year, and that's not a consistency, or maybe even for 2 years, but that is never considered consistency. You have to look for consistency with the growth, and that's where the growth stocks are. Now, the second thing you should look for is small companies, and it is the risky part. So, small companies are always risky because these are the very small companies and they don't have large reserves of cash and they don't have any competitive position in the market. So, they are at the stages of a competition that they are not in a position to compete with big companies, and they have various risks also, but you can only avoid the risk by knowing that what you are doing. I mean, by fully knowing the stock or the company you are investing in. So you have to look for small companies because they are the fastest growers in the industry. And I mean, if you buy Microsoft or Google, you just can't expect that stock that it will double your money. Although the company has various advantages, that it's a large cap, also it is considered the safe stock, but these are not the ones you should bet on if you want to make a lot of money, because they don't grow as fast as the small caps. So you have to focus on the small caps. And these companies grow very rapidly because their growth is still untapped. However, when the company becomes big enough, it just moves like a crane. So it doesn't stop, but it doesn't move forward also. But small caps are like bikes. They have risk, but they move really fast. So if you want to find some growth stocks, then you can always find them in small caps. And the third part is management. So this is equally important as the first two, because management should be competent. They should know that what they are doing, and they are the cornerstone of any company. Actually, the thing is, it's ultimately the people who run the company, not the robots. So if you are investing in a company, you should know the management always. You should know that whether the management is competent or not. That is, whether they are able to earn profits efficiently, whether they do have expertise in what they are doing, or which industry they are operating in. And the most important, whether they are honest or not. Because management may try to dilute the share capital over time to benefit themselves, and they can also manipulate the numbers in financial statements and various other reasons. So knowing that the management of the company is really important is always an essential part of the stock analysis. And one of the best examples of management is Steve Jobs, and probably everybody have heard about Steve Jobs, that how he turned a loss-making, almost at the brink of bankruptcy company Apple and taking it to the world's largest market capitalization company. So you see, management plays a really important role in the stock's price. So always focus on management. And the last point I'm going to tell you is fundamental analysis. So this is probably one of the most important factor, because it includes analyzing the stock on the basis of fundamental analysis. So this means that the stock should be fundamentally sound, and you can check that from the financial statements. So for this, you should be able to read the financial statements and understand what are sales, operating costs, EBITDA, margins, profits, and basically all that stuff. So actually it's the beginner's course, so I can't focus or I can't explain each of this stuff in detail. But I will be starting a course on this stuff also, in which I will go in detail to explain all that complex financials. But as of now, let me just focus on this tutorial. So you should be able to analyze the stock on a fundamental basis. Also, you shouldn't miss the qualitative data, which basically means the business model of the company, its comparative advantage, its market position, and so on. So finally, fundamental analysis is required to analyze a growth stock, which will significantly reduce the risk, and it may help a lot in analyzing any company, and it will grow your money also if you do it right. So ultimately, these are the four factors, these are the four requirements of a growth stock. That is, earnings, management, small cap, and fundamentals. And you should not miss any of the points because all these are really important in finding a true growth stock. Although there can be more points, also, as I told you, there's no perfect formula for investing, but this is still good enough. So look for all these criteria. And that's pretty much for this tutorial.